welcoming on board a management on the show. We have with us Mr. Rajesh Bhatia. He's a group president and CFO at Uflex, joining us on the show. Hi, Mr. Bhatia. Thank you so much for making time and speaking with us. Wanted to begin by asking you about the outlook going forward, because FY23, of course, was a bit of a dull year for the entire sector, given a lot of headwinds. But going forward, what's the outlook looking like for FY24?
I think the demand in India was okay. The demand was subdued in Europe and America. And the reasons are quite obvious because Europe had a huge turmoil when Russia went on conflict with Ukraine. And with the higher energy prices, which took away the consumer's savings. So they had no choice but to, sort of reduce their consumption for some of the things which are nice to have. And that's what affected the packaging industry because, the demand for the energy, especially in the winters, is quite a bit, and they had to reallocate their budgets based on the current energy prices. Also, what hit that, the higher interest rates in US and Europe because the whole world was fighting with inflation and they had to increase their interest rates. So even the mortgage payments because of the higher interest rates got affected. So when there was a reallocation of the home budgets, I think that was the point at which, the demand got affected. uh, so I think another quarter or so, and then we can gauge the impact on the demand again. And but as of now, it seems that the worst is over, and we looking to consolidate. The industry is looking to consolidate.
Mr. Bhatia, let's talk about your India's end of the business then. What are your clients telling you in terms of visibility of business? Also, because overall raw material side has gone down, so margins also will be on the better side. But how do you see the margin improvement because of raw material ends easing?
I think next quarter or so, they'll still remain subdued in the packaging films. And after that, I think the margins will improve. So there's no point in hiking the prices when the demand is low and give up your market share. So I think we'll have to wait for another quarter till we see the improvement in the margins, especially in the global markets. India, as I said, India is intact, and in fact, India FY23 was our highest ever production, our highest ever sales, our highest ever top line, highest ever profitability, led by the growth in the packaging demand for packaging, both flexible and aseptic. And we had as much as 33% growth in our packaging business in FY23, which momentum we are continuing now in FY24 as well. When I look at April and May, in aseptic packaging, we are already working at above 20% of our rated capacity of the plant. So all that is, the India story remains very, very bullish, and it's another quarter before we will be able to come back and say as to what are the guidance in the other world markets we operate in.
No, sure, Mr. Bhatia, point taken that the demand was holding up well when it comes to the domestic side of the business. But then there is a lot of capacity addition as well, which is happening, increased competition as well. All of this, would it impact your profitability and this industry, profitability in some way?
So I think most of the capacity additions which were to come up in the PET side are already, you know, are already accounted for. I don't think so going forward in 24 and 25, there is any substantial capacity expansion that's happening. So whatever was to happen has already happened in FY23, and that's where in FY23, when there was a situation of oversupply, at the same time we had the situations in Europe and America, which led to a decreased consumption. And so, it was a double whammy. On the one side, you have the excess supply, and on the other hand, the existing demand also goes down. Uh, as against a normal 3.5% growth in the matured markets of the world. So that really impacted the margins as well as the volumes. And when the volumes are also impacted, your cost unit mechanism also goes in for a toss. So you have a higher costs, which translates into higher unit costing, and your margins are impacted. So it's a vicious cycle. But last 2 quarters, as we see, Q3 was bad. Q4 was much better as compared to Q3 in these markets. And in April and May also, we've seen some upside. At least in India, we've seen a better margin profile in the month of April and May, industry as well.
Mr. Bhatia, any possibility of demerger of your packaging business from film business? Because that's something which market has been speaking about for a long time, potential value unlocking. Are you looking at that right now or no?
I think there's no thought process as of now, but we get a lot of ideas like this. But at this moment, certainly there is nothing on the anvil. And as and when, obviously, there are plans to do that, we have to go to the being a listed company. We have to announce it to the markets. We'll do that at that point in time, but certainly nothing on the anvil for the time being.
Okay, Mr. Bhatia, on that note, we let you go. Appreciate you joining us on ET today. So, talking a bit more optimistically when it comes to their FY24 outlook as well. But on that note, slipping into a very short break.